So what happens when a single government announcement sends a stock market into overdrive? Well, we just saw it happen in India, and it sparked an absolutely massive rally in just 1 month. We're going to break down exactly how a simple change in taxes created a billion-dollar boom, see who won big, and ask the big question: is this the start of something even bigger? Just look at that number. 6 lakh crore rupees. That is the staggering amount of new wealth that flooded the Indian stock market. And get this, it happened in a single month. This wasn't some slow and steady climb, it was an absolute explosion of investor money. So what on earth could trigger a boom this big, this fast? All right, so here's how we're going to break this all down. We'll start with the boom itself, then get to the policy that lit the fuse, the GST game changer. After that, we'll follow the money to see who won big. Then we'll explore something called the Lollapalooza effect, but we'll also hit a note of caution and wrap it all up by asking if this is a total reset for consumption in India. Okay, let's dive right in. First up, that 6 lakh crore boom and the mystery of where this incredible surge came from. I mean, really think about that for a second. Markets go up and down, sure. But a rally of this size in just a few weeks? That needs a massive catalyst. This isn't just a good quarterly report or some minor policy tweak. No, something fundamental, something really big had to have changed the game. And that game-changing moment, it arrived on August 14th. That's when the government unveiled a policy that was designed to do one thing: directly slash the price of goods for millions of people. And you can bet that investors were watching very, very closely. The official term they used was GST Rationalisation. Now, that sounds a little formal, but it's really just a fancy way of saying they were rolling out some pretty significant tax cuts on a whole bunch of consumer goods. The idea was simple: make things cheaper, encourage people to spend, and really kickstart the economy. And these cuts were real, the kind of thing you'd actually notice. This wasn't some abstract financial policy. The tax on small cars, it dropped from as high as 31% all the way down to 18%. Same thing for popular motorcycles. Even a new pair of shoes got cheaper. We're talking about everyday items that suddenly got a big price drop starting September 22nd. So the government makes it cheaper to buy stuff like cars and shoes. The next question is pretty obvious, right? Where did all the money go? Well, as you might expect, it went straight into the stock market. And yep, the money flowed exactly where you'd think it would. India's main auto stock index, which is basically a basket of the biggest car and bike companies, jumped over 11% in just 1 month. Consumer goods weren't far behind, with a nearly 6% pop. Both of them just blew past the rest of the market. And if we zoom in and look at specific companies, the story gets even wilder. Bata India, the shoe company, saw its stock leap 20%. Eicher Motors, the folks who make Royal Enfield motorcycles, up 19%. And Maruti Suzuki, India's biggest car maker, a massive 18% jump. This is what it looks like when the market expects a sales explosion. Now, this crazy surge wasn't just about these companies having a few good weeks. A lot of experts started to think this was the beginning of a much larger, much more powerful chain reaction in the economy. And this is where it gets really interesting. Analysts started running the numbers and figured that the government's 48,000 crore rupee tax cut wouldn't just stop there. Because of something called a multiplier effect, where every rupee saved gets spent and then respent again, they projected it could actually create double that amount, unleashing 96,000 crores of brand new demand. You know, this idea of a perfect storm of positive things all happening at once, it actually has a name, borrowed from the world of investing. It's called a Lollapalooza effect. It's what happens when you don't just have one good thing going on, but a whole bunch of good things all happening at the same time, amplifying each other. And that is the crucial point here. Experts like Vinod Karki over at ICICI Securities aren't just looking at these GST cuts in a vacuum. No, they see them working together with earlier income tax cuts, lower interest rates on loans, all of it combining to create this massive, coordinated boost for the entire economy. But as you know, with any huge market rally, not everyone is convinced the party will last forever. So a pretty healthy debate started to bubble up among analysts about whether this boom was actually built to last. And this sparked a classic debate. On one side, you have the bulls, the optimists, who see this as a permanent expansion of the market, predicting a lasting 8 to 10% jump in sales. But on the other side, you have the bears, the cautious ones, from firms like Kotak Equities. They're arguing, hey, this sales spike is probably temporary, and with so much competition, companies won't be able to hold on to those profits for very long. So all of this brings us to the ultimate question at the very heart of this story. Was this just a temporary sugar rush for the market, or was it the beginning of a whole new chapter for the Indian consumer? So there you have it, 6 Lakh Crore rally, all sparked by a single policy decision, and it leaves us with two powerful competing narratives. Is this a fundamental reset for India's massive economy, or is it just a temporary feel-good boom? The answer to that question is going to shape the country's economic story for years to come.